Hi traders, it's Matt Simpson here from FOREX.com, and I want to take a look at dollar yen heading into tomorrow's CPI figures, and then take a look at some euro pairs including euro dollar, euro pound and euro Aussie. Now starting on the daily dollar yen chart, I've labelled the recent intervention days, and the more extreme one being these 2 days here where we had the FOMC meeting, which was not as hawkish as expected. And we also had MF intervention alongside help from US Treasury. Now, I find it interesting that we held above that May low, and I did do analysis last week looking for potential bounce from these lows, which we're now seeing. And it's interesting that we've got this almost rally from the 200-day EMA, but we do have plenty of resistance levels nearby. And that's quite important, because you could argue that dollar yen bulls are trading against the MOF, which is quite a dangerous game to be playing, especially when they've got the US Treasury backing them up. So whilst there is potential for this continued grinding higher, ultimately, I'm looking for evidence of a swing high, because I do think we've seen a significant high back here around 164. Taking a closer look at the intraday chart shows some more levels, and nearby we've got obviously 160, we've got the monthly pivot point, the July low and this swing high alongside the monthly R2 pivot. Now, if we do see a hotter set of inflation figures tomorrow, which is possible, dollar yen could continue higher. By making the assumption that the higher this goes, the greater the risk there are of another round of intervention. So even if it gets up to the 162 area, there's a decent zone of resistance with the monthly R1 and weekly R3 pivot point to consider. And that's not impossible, because if you look to the left here with this volume profile, there's a lack of volume during this intervention, and such areas can act as a vacuum for prices. So if there's a decent dollar bullish catalyst, we may well see this filled relatively quickly. And just on US data, keeping in mind that we had a weaker NFP print, which scaled back bets of a September hike. We've got US inflation data coming out on Wednesday. Previously, we saw CPI slow. ISM services prices paid has slowed as well. So maybe we'll be treated with a soft print. If so, I do suspect that the MF might be in a better position to get behind that move, because we did see them intervene after a soft inflation print back in 2024. If dollar yen keeps on rallying, MF might want to intervene again, and if we get US CPI, I think it also increases the odds. So traders do want to probably tread quite carefully on this pair. Now looking at the Euro weekly chart, there is a case that we've seen quite an important swing low back in June. Bullish momentum has really took off on this bullish outside week, but already momentum is waning, and we've got this bearish trend line, which prices are kind of trading around. Now looking at the daily chart, it shows this clear momentum shift, yet we then have very, very choppy price action and overlapping candles around the 200-day EMA. So my guess at the moment is that whilst there's potential here for another stable 2 higher, I am also looking for evidence of a swing high around 116 on the monthly R1, and the potential for a bit of a pullback, which could be bullish for the US dollar. Of course, a potential catalyst there is if we do get hotter than liked inflation data, which is possible given we saw that rise in crude oil prices. I'd like to catch up on euro pound. Last time I highlighted this descending triangle, which projects a theoretical target down near these levels. Now, we had quite a decent V bottom and a deeper pullback than anticipated, but notice how it has respected the 50-day EMA. We've also got this lower high, and bearish momentum has now returned. Sure, it's holding around the monthly pivot point for now, but for me, whilst prices remain above this swing high, bears may be looking to seek into minor rallies on the assumption that we've seen significant swing highs here, and that momentum looks to be moving lower towards the eventual downside target. Obvious support levels, of course, include the swing low around 85 and the monthly S1 near the July low. So let's wrap up on Euro Aussie. I think it's one to keep an eye on, but patience may be required. Now, some might label that as a descending or symmetrical triangle. Not in my books. The oscillations are a bit all over the place, and what I'm really seeing here is a failed break lower, a higher low, a strong momentum shift, and a shallow pullback. So ultimately, whilst prices hold above this swing low, I'm looking for some evidence of the swing low here and a burst higher. Now, whether that's going to be part of a much longer trend reversal, only time will tell. But if you look back through history on Euro Aussie specifically, it's very good at these sudden shifts higher, quite jaggedy pullbacks, then it bursts higher again. Did the same thing back here, also here as well. So will history repeat? Time will tell. As always, hope that's useful, and wish you best of luck with your trading.